Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my lines on the chart from last week, which showed a very well-defined trading channel. The bottom line, acting as support, held as support this week, while the resistance line also held. And if you go back to last week's report, you'll know that I forecasted a lower high to test the high from March 20th. So we did go up on Monday. We failed to get over this high, setting a lower high, and then we proceeded to go down to fill this gap. Now, what's most interesting is that we're hovering just above the support level now, with the gap still below the market right around the 173.35 area. Interestingly enough, this morning, April 3rd, an article was released talking about the news from the Bureau of Labor Statistics showing that for the first time in history, Americans not in the labor force exceed 93 million. That's a historic number right there, because what that really means is about 37% of the population is not working. So don't believe what the government agencies are telling you with regard to unemployment being down. That just means that people are rolling out of the unemployment rolls and into a no-job role. So how is that going to play out for our markets? We really don't know what's going to happen on Monday, because this came out on a day when the markets were closed. So this could literally shock the markets on Monday, forcing us below the support level. And it's still too early to tell because we have to wait for the markets to open. So the caution flag is out. What could very well happen is a drop below the support, and we could start moving lower into this area where we would fill the gap. Now that's for the diamonds. Looking at the spiders, which is the S&P 500 index, the same thing applies. We set a lower high here on Monday, and then there's still a gap below the market on the S&P. So if you look more at a broader based index with the Russell 2000, you'll see that on Thursday we had a long shadow above the candle, which by the way is bearish, and again another gap below the market. So things are looking pretty bearish for next week. And I would recommend that you don't take any new positions, but definitely protect whatever profit you have with the use of sell stops, or maybe even using some options if you're fluent in there to protect your position. Maybe some protective puts might be a good idea for you. If you've never traded an option, obviously don't go into that unless you have guidance from an advisor of some sort. But that's why we teach options. We show people how to make money on the way up. And even in bear markets, we can make a lot of money. You see, the volatility index, which is a measurement that tracks the S&P volatility, is also in an upward trend right here. Now remember, the volatility index is contrarian to the S&P. I'm leaving this projected uptrend line for the VIX on my charts because I think what ultimately will happen is we'll start to see a spike in the VIX, which remember is inversely related. So if we see a spike in the VIX, we'll see a drop in the S&P. So we'll also have to see how the news plays out next week as they spin the jobless numbers around. And of course, we want to keep an eye on the Fed. Fed Chairwoman Yellen is talking about how inflation might stay down because of a strong dollar. I don't necessarily believe that's the main reason. Now, I'm not going to debate the Fed chair, but usually when unemployment is down, inflation is also down, because unemployment or jobless rates are directly connected to inflation. As salaries increase, that's when you see inflation increase. So I will be watching interest rates very carefully into June. And more importantly, I'm going to be watching the Dow to see if investors are going to start to move out and play more or less the safe card. And if they move out, you could see lower numbers. So keep an eye on your positions. Make sure you're in a protective stance, and follow the Market Guys for your updates. If you go to the Market Guys Facebook page, you'll also see that I release news that I think is relevant to our markets, and that'll help you keep track or keep abreast of what's going on so that you're not caught by surprise. We want to be prepared. So have a great weekend, and we will speak with you soon. So long.